ETFs, you've heard about them, we've spoken about them in quite a lot of detail. Usually, these exchange traded funds have equity as the underlying. They are listed on a stock exchange and you can buy and sell them. They represent an underlying asset. Like I said, they usually represent equity assets, but you also have gold and now you have silver. In fact, ICICI Prudential AMC is offering India's first ETF. The NFO is something that opens on the 5th of January and is available till the 19th of January. And soon there will be other fund houses that also offer a similar product. But why should you consider investing in silver and what place does it have in your portfolio? To speak about this, I have with me Chintan Haria, Head Product Development and Strategy at ICICI Prudential AMC. Thank you so much, Chintan, for joining in and wish you a happy new year from all of us here at ET Now. Let's start with the most basic question before we get into the modalities of it. I think quite a few of my viewers are familiar with gold and gold ETFs. Why silver?
Yeah, thanks, Alex, and wishing your viewers at ET Now a very happy 2022 and a healthy one as well. Why silver is similar to the question that we get asked, right? Why gold, why silver, why equities? Effectively, in an inflationary environment, which we are in, courtesy the easy monetary policy that we've seen over the last 18 months, where inflation is running high, interest rates are low, and the money available for investments across asset classes is high. People are looking at diversifying their portfolio and also ensuring that the risk is divided. And that's where in India, if you see over the last couple of years, while equity investments have definitely gained favor and are growing, people are also looking at international investing or international funds for investing. Apart from that, gold has been in favor over the last 2 years in terms of the growth in gold ETFs that we've seen. And in that link, till now, there were no regulations to allow silver ETFs. The regulations have come in, and we are very happy to launch India's first silver ETF for investors to benefit out of the investment in silver, which needs no introduction as a commodity. 5,000 years back, it was a store of value as well as a traded currency. Today, it is one of the most used commodity or used, let's say, because of its conductor strength, used in electric vehicles, 5G technology, as well as solar. And the demand improvement that we're seeing in silver means that silver has a good future.
Do you think that aspect, the fact that we saw silver prices soar during the pandemic years, possibly because of the start-stop of economic activity and the fact that a large part of silver consumption is through renewable and industrial use, do you think that that's one of the reasons why investors should certainly consider this as a commodity that they should have it in their portfolio?
So if we look at silver and also gold, if I can add, they are commodities which do well when probably there's a little bit of uncertainty in the markets, and all of us will agree that there is certain uncertainty today. The relative valuations versus, let's say, equity markets globally, which have done well, interest rates being low has meant debt markets have done exceedingly well. So in terms of relative valuations, in terms of comparison with other commodities, as well as the fact that the growing industrial applications which are there, and silver gets consumed, it does not get recycled that easily, has meant that silver has generally been a commodity which has shown a higher delta versus gold or a higher beta versus gold. And like you rightly mentioned, the fact that in pandemic, both silver and gold has gone up has meant that they've caught up on the lost ground that they had. So 2008 to 2011 was a good period for gold and silver. Then for almost 10 years, they consolidated, they came down, and now they're basically back to the levels of 2011-12 globally. And in dollar terms, if you look at it, for 10 years almost, silver and gold haven't given much return if you look at a 10-year return. We believe that over the next 2-3 years, if there is a reallocation on the part of global investors away from global debt or even if away from global equity, that can support gold and silver as precious metals and as commodities which generally tend to do well in tandem when there is a little bit of uncertainty in the global markets.
Yeah, and the returns over the last three years are nothing to scoff at, Chintan, for silver. I just want to understand now from the perspective, the modalities of this ETF. It's going to be the physical asset that the fund will be investing in, right? How is it going to work?
Yes, so the gold ETF and silver ETF in terms of its functioning are going to be similar. So those who are familiar with gold ETF will find it easy to understand. Whatever money we receive in the gold ETF, in the silver ETF, my apologies, whatever money we receive in the silver ETF, in the NFO, we will be investing in the silver, physical silver, which is LBMA quality or the highest quality as prescribed by the regulations. And against that physical silver, we'll be issuing units to the investors, which can then be bought and sold on the exchange, much like any other share or much like any other ETF. So the transaction is pretty simple. We get the money, we buy the silver from the authorized agencies, we store the silver, and against the silver which is stored, we will be issuing units to the investors, and they can pretty much hold it till the time they wish to hold it. And if they want to trade out or buy more, they will be able to do it when the ETF eventually lists in a few days' time after the closure of the NFO.
So, one concern that is raised with regard to ETFs, especially at launch, Chintan, is the depth of it, is the liquidity of it. Do you think that that is something that you will stand to take care of? Market makers are there to take care of that?
Yes, so there are two aspects to it, Alex. One is, of course, being the first one, and if we have a large base of users who are or investors who are going to be investing in the silver ETF, there will be natural buying and selling of investors, which will happen in the ICICI Prudential Silver ETF, which will ensure liquidity is there. Second is we do have market makers who will ensure that the screen liquidity is strong. And from that perspective, we need not worry, or investors need not worry. And they will get a price which is more or less similar to the underlying price, much the same way as it is happening in gold. I agree that as far as ETFs in India are concerned, they are a reasonably new instrument where the IUMs or the allocations are lesser. But the way we've seen 2 crore demat accounts going up to 7 crore demat accounts in the last 3 years, a large part of this can potentially take advantage of the silver ETF. And if more and more investors do invest in the ICICI Prudential Silver ETF, liquidity will probably beget liquidity, and that will take care of all the investors' concern as far as liquidity is concerned.
But one strategy I think that quite a few AMCs have employed, Chintan, when they launch ETFs is to also have a fund of funds. And this is for people who are not really present in the form of demat accounts but invest directly through mutual funds. Is that something that ICICI Pru will do as well?
Yes. So in order to ensure the entire gamut of investors who may not be having a demat or a trading account as well to participate in the silver ETF, we will be launching the silver fund of fund as well in the subsequent weeks. And that will allow non-demat owners or people who do not have demat accounts to also participate. The fund of fund will invest in the silver ETF. So investors will get the advantage of participating in the silver ETF through the fund of fund without necessarily having to invest in the exchanges. They can invest in the fund of fund in a similar manner how they invest in a mutual fund scheme. And this is also similar to how the gold fund of funds are there. So the gold fund of funds invest in the gold ETF. They are available right now. And the silver fund of fund will also be available in the next few weeks for investors to invest. And the NFO will come in the subsequent weeks.
Chintan, whenever an individual or an organization decides to do something new, often there is an element of risk involved, of course, but there's also quite a bit of preparation. So I'm curious to understand how you studied the field, and did you look abroad to see how similar products have done in other markets?
Yeah, so effectively over the last 3 years or so, the thoughts, the preparations, and how well we can manage the silver ETF have been in our minds because we always knew that physical silver has its limitations in terms of easy oxidization. It turns silver black, and it's not easy to store a bulk key commodity like silver. So silver ETFs, the dipstick which we had in terms of investors was that investors would be interested in investing in silver ETFs and silver fund of funds as and when they come because of the convenience, which especially got accentuated in times of lockdown where people could not move out towards jewelers, but they could basically take advantage of sitting at home and investing in gold ETFs. So that similar thought process will apply in silver ETFs. Also, the global experience had told us, if you look at 2020, if you should see 2010 to 2020, the largest amount of inflows in global silver in terms of ounces, I think 12,000 ounces of silver were bought, or incremental money worth of 12,000 ounces did come into silver ETFs globally. So that also gave us a cue that at times there are interest of investors in silver as well. It is not as high right now, but as silver keeps doing well, because if something doesn't do for 10 years, for an elongated period of time, investors tend to lose interest in that commodity. But as can be seen, if the returns come, then the investors do follow. So we are trying to bring it at a time where the returns have come over the last 2 years, but 10-year returns are not that strong. And investors do get an opportunity to invest, much the same way as international investors have got the opportunity to invest in international silver ETFs. Indian investors are getting a chance for the first time.
And the breaking of a trend, as they say, right? But I'm just trying to understand, and obviously I'm not asking for advice in that sense, but I'm asking in terms of how this product is being placed. It is being talked about in terms of your precious metal allocation, and so therefore, what position would it fill in an individual's portfolio in your estimation?
Yes, so at ICICI Prudential, we've always been proponents of asset allocation. And so the asset allocation schemes like the balance advantage fund category should form a large part of your core allocation of equity. Given that debt as an asset class currently is not something which is being pushed too much because of the expectations of higher interest rates and inflation. Along with the balance advantage fund category, a certain passive investments, either in the large cap category or in the smart beta category, like the low wall category, can be looked at. And in addition to the international investing, which people are trying to do through global fund of funds, etc., we believe that from an allocation standpoint, 10% allocation in gold, maybe 5% allocation in silver, given the valuations relative to equities, given the valuations of international equities are also not cheap necessarily, except Asia, will fit in well. So from an asset allocation mix perspective, given where the other asset classes are right now, of the total corpus that an investor may have, 10% in gold, 5% in silver, given that silver is a bit higher beta than gold, is something which seems logical to have right now from an investor allocation perspective.
All right. Thanks so much, Chintan, for joining in, and wish you all the best with this new ETF that you have just launched.
Thank you so much, Alex. Thanks.